I've not failed. I've just found 10,000 ways that don't work. Thomas A. Edison, the great inventor. And that was a man with persistence. He just kept going until he finally figured it out. And I hope that that is your mindset when it comes to learning to trade. Nothing worthwhile comes easy. And we want you to spend 10 to 15 minutes with us each and every day, remembering that it's a binary decision. Is the market, is the stock, is the ETF going up and down? And we are using these technical indicators mainly, and the best ones that the best traders throughout time have used. Candlesticks, well, price, we'll say. Heikin-Ashi candlestick, relatively new invention as far as indicators go. And volume, price and volume. And then, of course, what do we match up with that? We have the Heikin-Ashi candlesticks. If you don't know what those are, I'll put that training at the end of today's video, making myself a note right now. And you'll see a link to our Heikin-Ashi candlestick training so you understand it. It means average pace, I'm told, in Japanese. That's what it helps you see. You don't have all the gaps and the fill-ins and all the confusion and having to learn all these different types of setups. You just watch what's going on, learn how to put volume with it, and then you can understand what is happening. Now let's jump into these charts. We see everything's up for the day except bonds pulling back about 0.5%. Now as we look at the biggest gainer for the day, that's going to be Bitcoin up 5.51%. That'll be the last we look at. We'll jump in first with another good gainer. It's the S&P 500. It's about time. You see almost an unbroken slam down. There was pretty much two candles in all this time period from where the stock market started moving down back in late February, pretty much all the way through March until today. And things stopped and popped up a little bit. Does that keep us from still being short with a directional probability of 70%? It does not. But again, we shall watch on Monday and see what happens. Where we are right now is, again, look at all the volume as it has been accelerating on the weekly charts as the candles have gotten bigger. And you, of course, see on the 2-day candles as volume has continued to increase until today. Now, this green doesn't mean up volume on the 2-day chart. It means that the candle opened higher than the prior close, which had not happened for all those red candles going down. So we still have a lot of downward pressure. Let me tell you where that leaves us. We see support on the chart at 520. We see resistance at 568. Where we are right now at the 562 and something mark is we still have that 70% probability of continued down movement. As we back check that for accuracy at the current price that we are at and it continuing down from there, we get about a 65%. Now, if you want to get up to 70% back test accuracy for a down move, you will need to let it do what? You'll need to let the price rise up to 568 from 562. Check that resistance line, okay? That's like a ceiling. You let the price rise up to that, hit it, and then bounce off and move down. Will it necessarily do that? No. It may just keep going. But if you want the safest potential entry point with the most accurate back test of up to 75%, then you're going to let it pull back, hit that, and then show that it's moving off of it. And again, for those of you who want to see the trade execution summary grid, that'll be in your show notes. When I say show notes, that's the email that we mail out to everyone at the end of each and every day. How do you get that? Doesn't cost you anything, not selling you anything. Just go to chartingwealth.com, sign up right at the top of the page, put in your name, your email address, and we will send it to you. That list is never spammed, never shared. So that is where we are on the S&P. Entry points about where we are now if that continues to move that way on Monday. And again, if you want to let it back up potentially to 568 to the resistance level. So when you go look at that grid, you'll see where the support is. And again, that shows you that, again, over the next 5 market days, we can see things dropping all the way down to that support level, about a $42.41 move based upon where things ended today with a 65% back test accuracy based on how the charts moved in the past. That's what we've gone over. So keep that in mind as you move into Monday. Remember, not a stock calling service or an education firm. Want you to practice, trade, prove this to yourself. What do we see? And by the way, up 2.07% for the day, the S&P. NASDAQ up 2.42%. Here's where we are on that. About a 65% probability of continued short, that is down move. And you might say, Tom, why would I be selling something and getting less for it? We keep, again, mentioning this every day because we know there are new people coming to us every day. PSQ is, again, if you don't know anything about options, puts and trades, puts and calls, those types of trades, we have inverse funds. Again, this is the ProShares short of the QQQ. It's called PSQ. You can see it right there in the watermark on the back of the page. That shows you, that's the 1-week chart, 2-day chart, 195-minute chart. So we can see that it has been springing up. And again, today as the NASDAQ was up 2.42%. It was down 2.42%. Price is not the same. You can see this is priced differently. It's around $40 a share, whereas the NASDAQ is around $479 a share, over 10 times more, about 12 times to be exact. So as we look at this, I could switch over the charts. I just don't do it. I stay on my 5 charts each and every day, each and every week. That is the S&P, the NASDAQ, 20-year government bonds in the U.S., gold, and Bitcoin, and that's the Bitcoin ETF. So that's what we follow. And again, that's how we track it so we can help you see it. If you want to know about options, we have a great options training. That does require you to be a Patreon member at any of the 3 levels. The minute you sign up, you will get as a Patreon member, my book, 3-Wave Trading Advantage. It's my brand new book. You'll get it in an e-version. You can download it to your Kindle or to your Google Books and read it just like a book on your phone, on your iPad, on your computer. I read it on my iPad and phone. And you also get Options Made Simple, the Charting Wealth Way. So either one of those are great options for you. If you want to learn how to trade options, we've got a great 3-part training that you can start watching today if you just become a Patreon member. So where are we as we go through this next week? We see support at $450. We see resistance at $485. We're currently at $479. Our entry point's just a little below that at $478.38. And remember, the resistance number that you see on the trade execution summary grid, that resistance number is what you would wait for the stock to pull up to before it moves down again to get up to a 70% back test accuracy, whereas right now we have a 60 at the current price. Again, I keep trying to make this more simple and easy each and every day in each and every way I can to explain this to you, to make entry points and practice trading easier. Let's go to 20-year U.S. government bonds. We find ourselves at the end of this week after several days of down movement, down today 0.53%. We find ourselves going short on bonds. Now again, it's 55% probability, so that's not much better than a coin toss. The resistance is at 51.50. The entry point right now is at around the 90.56. We're currently at 90.17, so you'd let it pull up a little bit, hit that, and then come back down if you want to be really safe. See if it'll go up to 91.50, and then if it starts to bounce off resistance and move down, that's where you jump in. Your backtest accuracy goes from 50% up to 60% if you let that happen. But again, it's only a directional probability of 55%. So I would wait for much, much better odds. Sort of like the S&P at a 70% short directional probability. So again, we're giving that to you because that's what we see. not making any recommendations on your practice trading, and damn sure not making any recommendations for you to trade real money. You don't pay us for that. We don't offer that, but we do offer what we have for you to consider, practice, trade, learn, enjoy, have fun. Again, if you feel like you're getting good at this and you're ready to start using some real money, we call and ask that you try fractional shares. If you have an account with any of the online brokers, they may allow you to buy like a fractional share of the S&P 500 or of gold. Now, again, you don't have to do it with something like Bitcoin. The Bitcoin ETF's only $23.93 right now. You could buy 4 shares of that and not spend 5 shares and not spend 4 shares and not spend $100. If you lost 20%, it'd be $20. So that's what we're talking about with fractional trading. So as we look at 20-year U.S. government bonds, the backtest accuracy, 50%. If you go with that entry point of 90.56, goes up to 60%, like we said at 91.50. Let's move on now to gold. What do we see going on with the precious metal? Look at this. It's gone to a higher high this week. It's our only long position, because you'll find out in just a minute that we're short on Bitcoin too. Gold, we're long, 60%. Directional probability continuation for the next 5 days. Remember, this is always 5-day increments. So, and longer, but that's what we're looking at. So that, again, you could see gold go down on Monday, but our probability is that over the next 5 days, it'll have an expected move of $8.16. And our probability of that is 60%. And our backtest accuracy, ain't that great? It's 55%. Now you can get it up to 65% if instead of using the less strict entry point, sort of a more aggressive entry point of 271.84, you wait until you get to the support of 260. In other words, it drops back and hits 268 and then takes off again. Remember, it's always going to be the opposite. Long, your support is what you want it to pull back to before it goes up. You want resistance in short positions. You want it to go up and then move over back down. That should click in your mind and make sense. Sort of like the same thing when I tell people about bid and ask. And they say, hey, which do I pay when it comes to bid and ask? Even here you can see that on this website, TradingView, they're smart. They just put buy and sell, not bid and ask. Only thing to ever remember, when you're buying a stock, you're going to pay the higher price. When you sell it, you're going to sell it at the lower price. See it right here on gold? You can see gold is right now, after market trading on gold, is 575.40, and you can see the sell is 575.28, so it's always lower with what you sell it for. It's like if you buy a brand new car and drive it off the lot. They're going to give you more money if you turn right around and want to return it? No, they're going to give you less. So the buy price is always less than the sell price. Keep that in mind when you get confused about bid and ask. Okay, that's where we are with gold. Lastly, we will take a quick look at Bitcoin. Now, 70% short, that's pretty good odds right there. That's what our directional probability is. We see the support is at $20. The resistance is at $24.50. We're currently at $23.93. We've got an entry point of $23.34, a few cents less than that. Now remember, if you want to be safest, wait and see if Bitcoin's going to bump up on Monday sometime to about $24.50 and then start to push and roll off that with decent volume and a red candle, say on the half-day chart. If you see that, that's the safest way to then jump in and write it down. Suspected move, $3.34. Backtest accuracy, 60%. If you get in at the 23.34 level, if you wait for it to, again, pull up to the 24.50 and then rotate over going down, that goes all the way up to 70%. So again, the only thing better than HODL when it comes to it, again, pulling up to 24.50 and then rotating over, going down to go short on it, is waiting for the S&P 500 to bump up to 568 and then roll over going down. And then you have a 75% possibility, according to our back test, 75% accuracy. So again, and it closed at 62.81 is where it is right now. So keep that in mind. Have some fun. Pay attention. Make a copy of that grid. Keep it with you. It'll be in your show notes. Watch it over the course of Monday and compare those as we go through them each and every day to understand what's going on and to find your entry points and to see the accuracy of what is being provided. Everything is about you doing it yourself, you understanding. This is not about you plugging this in some kind of machine, simply doing that work for you. You've got to prove to yourself that you know what you're doing. That is where we are, my friends. Always love to hear from you. CW@chartingwealth.com. God bless, all the best from the whole team at Charting Wealth.